Good morning, everybody. Welcome to the launch of Snipers Live, MW Trade Coaching. Thanks for joining us, everybody. It's an exciting day for me and for the markets, as we'll see here in a minute. Let's get started. By the way, while we're going through here, if we got a decent amount of people here, but if you'd like to share, you could always raise your hand and actually speak if you like. We'll set that up as long as we don't get too big here. So feel free to do that. If you have any questions, just go ahead and hit the, on the bottom of your Zoom screen, there's a reactions button. And you can, I believe, raise your hand. No, that's reactions. How do you raise your hand? How do we do that? Oh, there it is. It's right under reactions there. There's raise hand. So you have questions, just go ahead and raise your hand and we'll actually speak to each other like human beings, which is cool with this particular format of Zoom. So let's get started. Again, welcome. Thank you for your patronage, your business. I really appreciate it. It's a big moment for me in my life. It's been a long time coming. So with us, we have Matt. Good evening, buddy.
Good evening. How are we?
We are good. How are you?
I am sensational.
What time is it there in Sydney?
It is 11 o'clock at night, so ready and poised for market open in half an hour.
Are you good? Yeah, this is my favorite time of the day. This is like every morning I wake up, it's like Christmas, you know. What's the market doing? What's the news?
As I walk through the city during the day, I think, oh, everybody else is sleeping, and I'll get to see them first thing in their bright AM.
Are your girls asleep?
They are very much so. They went to bed a couple of hours ago.
All right. Well, let's get started, everybody. Stock, crypto, and options trading has large potential rewards, but also large potential risk. You must be aware of these risks and be willing to accept them in order to invest in the stock, crypto, and options market. Don't trade money you cannot afford to lose. This is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. Feel free to pause the recording when you get it. Later, probably within an hour or two after we close today, you'll get the recording. It'll be accessible from your dashboard as well as via email. So stay tuned. That's coming. Let's get into the markets. You know what I'm going to do first, though? Let me show you the website a bit. Okay, so with me is Gerardo. Gerardo has been instrumental in building the site, and he's also part of customer service and support. We've had a few issues with emails with Kajabi. This is the engine that we're using to automate a lot of the activities. But when you log into the website, right here you log in, you're going to be set to your library. And from here, you can access Snipers, which is this particular, let's call it a course. And then you can also access Hedge Fund Live. I think everybody but one person is in both. So when you log into your library, you'll see all of the products that you have access to. They include Snipers. They include Hedge Fund Live. Now that's group coaching and live trading. And then you also have podcasts. These podcasts are audio recordings. So if you're in your car and you want to listen to the podcast while you're driving to work or whatever you're doing, you can get access to the audio via podcast and play it on your phone if you choose. You also have access to the community forum. This is our discussion board, so to speak. It's a place for you to interact with each other, share trading ideas, ask for support. So when you go into, let's say Snipers, when you go into Snipers, from Snipers, you'll have access to the live trading recordings as well as the Sniper group coaching recordings. These would be historic. So within, like I said, an hour or two, you'll see the posting for today's session right under here under Sniper live trading. And always you have access to the Zoom links anytime you go to your dashboard. So you don't ever have to worry about trying to find the Zoom link. It's always going to be on your dashboard. And then of course, from here, you can go to community forum and interact with us all here as well. The other thing that we're going to be using here this morning is this WhatsApp. Okay, so some people have used WhatsApp before. It's an international texting capability owned by Facebook, and it allows us to interact with each other live. So if I see something going on in the markets, or Matt does, we'll post it here. If we see trade adjustments or particular information about a particular trade, we'll post it here. This morning, Matt and I are going to be looking for some trades, and we're going to be posting those trades, the images of those trades, right here in your WhatsApp group. If you have any trouble whatsoever with anything, including WhatsApp, just go ahead and reach out to us at support@mwtradecoach.com, and you can get support there on any items that you have whatsoever. So I think most everybody got onto Zoom, not to Zoom, WhatsApp. Let me check text here. Everybody, okay, so David will, video and the audio of each session will be sent. You'll also get what we call the Fathom indexed view of your recording, so you can go right to particular topics during the hour we're about to share with each other. Okay, let me see if there's any other questions here I want to answer first. All right, let's get started. Things are moving. Inflation and recession and rate hikes. Oh my, most people are scared of that. My mouth is literally watering. There's going to be so many opportunities this week. So what I wanted to show you here is we're going to talk about futures. Futures trade pretty much around the clock from Sunday at 6 p.m. to Friday to 5 to 6:45 p.m. Eastern Standard Time. So this is a whole market in and of itself. And it's already been trading since last night. And what we can do with futures is get a feel for what's going to happen in the next 50 minutes or so when the market opens. No, it's not. It's actually 20 minutes now. So in 20 minutes, the market will open, and we can get a feel for where the markets are heading, at least at the open. And so these are the markets here. Gerardo, let's tag this as futures so people can go right to this slide. Well, we got the S&P 500, the Dow, the NASDAQ, the Russell 2000. These are the four major market indices. Then we have oil, gold, silver, treasury bonds, government bonds, the US dollar, and Bitcoin even. So Bitcoin is one of those new instruments that is very popular at the moment. It's under dire pressure at the moment, and there's opportunity there for us across the board.
I wouldn't answer that if there were this.
Lose this.
Yeah.
Hey, Gerardo, can you mute everybody?
You can take off that.
Okay. I'm not advocating using Thinkorswim. I love it primarily because it has a simulated trading engine where I can place trades. I'll be placing trades, Matt will as well, in this environment here. And so we can get live fills. The fills are slightly more generous, let's say, on some instruments, but it's a really good place to learn to take the trades we'll find in Tom's tools and to place them in a live simulated environment. You want to do this before you get into the real world with real money. And if something happens, as soon as you put real money on the line, psychology changes. You start to worry a bit about money, losing money, greed and fear come rushing into your human experience, and you can mess things up and have a bad experience, quite frankly. So that's what I'll say about simulated trading. You've all been coached by me, and it's funny how a lot of people skip that step, blow themselves up on a trade, and they have this really terrible experience. So there's no need for you to do that. Let's just practice. You got plenty of time. Matt and I aren't going anywhere. We'll be here each week, twice a week. We'll take you by the hand and walk you through this whole process of generating consistency in your trading accounts. So in Thinkorswim, I've created a watch list for futures. Okay, so you can create your own list. You can create it's up here somewhere. You can create your own watch list, which I've done, and I've simply typed in all those future symbols that I showed you right here. All right, so we got the futures we can look at. We can also look at the ETFs, the exchange traded funds, that also map up to each of the markets shown on the left there. So I could look at the futures now. I can look at the SPYs as well. They're both the same chart. The prices are different, but they're correlated, like highly correlated. Okay, so let's look at futures. One thing about Tom's tools that you want to know, if you don't already, and that is that the data for today doesn't go live until 10 a.m. Eastern time, 30 minutes after the market. So we're going to be trading before that point. And for that reason, the data in Tom's tools is going to lag a little bit, but that's not going to stop us. We'll have plenty of opportunity. So plenty of opportunity to find trades. Let's take a look here. First thing I do in the morning, and if you like to share what you do in the morning to figure out what's up with the markets, you can do that as well. But one place I like to go is cnbc.com. Every morning I get up, the first place I go is here, or I flip on the, I don't have a television here in Costa Rica. I use my computers, but I go right to CNBC and see, all right, what's up? What's going on? And right on the splash here, Goldman Sachs crushes analysts' expectations on strong bond trading results. Shares rise 4%. So pre-market, Goldman Sachs is up. And the Dow futures are up 200 points because of it. Now, we've had a mix of financial results last week. Goldman Sachs happens to have crushed it. Bank of America tops expectations as lender benefits from higher interest rates. So that's something to keep in mind about banks, is that as interest rates rise, they make more money. And so Bank of America is saying that already. The higher interest rates are propping them up. So I want to, we want to keep a close eye on banks to see what banks are up to. Not all I forgot who it was last week, which bank it was. I'm off the top of my head, I can't remember. But they had crappy earnings. So the earnings across the banks have been mixed so far. So that's interesting. And I'm just looking quickly through here.
Bank of America is going to be a good one to watch today, Mike, because it missed earnings. It announced pre-market and it's missed earnings as well. So it'll be interesting to see how that plays out today. In the pre-market, it's up slightly.
Yes, I'm just looking here. So there's Bank of America. And
that
the
pop
chart
on Friday.
Yeah, popped on Friday. And pre-market, it's hard to see it, but pre-market, you're right. They're up. It's up to about $33 from $32.25. Something to watch. Maybe if all the banks start to pop here, we might even consider bull put spreads, long-term bull put spreads on Bank of America. But let's go through the futures quickly here, and I'm going to take a look at the S&P 500 /ES. Let me pull up my charts here. Okay, here is the futures. The market opens in 17 minutes, and I hit the table hard on support and resistance. Okay, so this is the S&P 500 futures, and you can see here we have resistance right at 3,900. Okay, so I expect that to hold, and even if it doesn't, we've got the 50-day average right there. So we're going to open up today. I'm going to keep an eye. We're all going to keep an eye on 3,900, which is the tops of those bars there. And then it was support here, and now it's resistance, strong resistance. 1, 2, 3, 4, 5, 6 repels away from 3,900 over the last month or so. I wouldn't expect that to rise from here. If we take a look at the other markets, the Russell 2000, same picture. Russell 2000, strong resistance right about 1750 or so right there. Strong resistance, zoom in a little bit. Strong resistance right there. Beautiful 50-day moving average. This is a perfect setup. I am expecting further downside, and I'll talk more about that in a minute. Now, this is the Dow Jones, and it's right at resistance as well, right around 31,500, which is also the 50-day average. Okay, so support and resistance, as you'll hear Matt and I talk, is one of I think it's the strongest thing you can put in a chart is support and resistance, because it tends to show up at round numbers. On especially institutional stocks, and then on many other stocks as well. Okay, that's natural gas. Let's look at the NASDAQ/NQ. See, it's the same pattern, everybody. You see that right here at resistance, right around 12,150 or so is resistance on the NASDAQ. So I think this is going to, this little reflex bounce will kick into place, and we should see further downside from here. Now, other things to consider for the week. I like to go to, by the way, I go to Bloomberg as well. Bloomberg's got some nice content, market overview stuff as well. Let's go into the US economic calendar for the week. Here's what goes on in this kind of market. Okay, let me pull up the S&P 500 again. What happens is, with interest rate hikes in process, the Fed meets, by the way, a week from tomorrow. On a week from Wednesday, the Fed will raise interest rates, probably 75 basis points, but maybe 100 basis points is in the air. We also have recessionary talks in the air. We got high inflation. It's just not a market where the economy and the market is not poised for upside in the climate we're in. And so what happens is, when Goldman Sachs comes out with good earnings and the market overreacts. So the market is very skittish at the moment. Any news that can be could be considered good results in markets rising, and any news that can be considered bad, like the CPI and the PPI, the inflationary reports that came out last week and said inflation is rising, and then you'll see the markets drop. So that's what makes this a little bit tenuous, especially if you're trading short-term credit spreads, which we're not. It can be very tenuous. So be careful with any kind of directional trades right now. Buy a put or a call, and one piece of news could move the market against you. So you got to be careful. All of that said, though, I think that the longer term prognosis is certainly down. Short-term prognosis bouncy between resistance here at 3,900 and then maybe 3,700 as support. So I imagine we'll bounce in this range until the Fed meets next week. Now, the reports that are coming out this week are home builders. The home builders building permits, those are coming out. Existing home sales. So the real estate sector could see a big move this week. So be on the lookout for that. By the way, this is marketwatch.com, economy-politics calendar. And you can get a look at what's coming out this week. On Thursday, we have jobless claims, continuing jobless claims. And then we've got the manufacturing PMI, which is an inflationary indicator. So there could be a lot of movement in the markets this week. Also take a look at Sector Spider. The whole idea here is to try to find, is money flowing out of or into a particular sector? And what I do is I come in here to sectorspider.com. You go to tools, sector tracker. What's your vector? And here you can get various time frames. I generally look at a month. What's been happening over the last month? Well, energy's been bearish. We all know that. Materials is down. Building materials is down over the last month, over the last 5 days. Again, energy, bearish. We'll look at oil here in a minute. Consumer services, those are the two most bearish sectors. And then as of Friday, let's take a look. Everything was up on Friday. All right. So I like anything right now bearish, where interest rates can have a dire raising interest rates can have a dire impact on that particular sector. Consumer discretionary is a big one. as interest rates rise, what happens is our credit card bills get higher. The interest that our credit card companies are charging us gets higher. So consumer discretionary stocks in a rising interest rate market should be on your radar. And then, of course, real estate, mortgage rates are going to be rising. That's going to dampen the appetite for buying houses, sometimes for more than their listing price. When I was right before I moved down here 2 months ago, I was I lived in Delray Beach, and I met many people who said that they can't find a house. The minute the house is listed, people pay more than list without even seeing it. They offer more than list without even seeing it. So that's going to start drying up, and we've seen it in real estate already. Okay. Now let's take a look at USO, oil. What's oil doing? It looks like we might getting about, there's a lot of volatility first off, with all the tensions in the world and inflation and China lockdowns and the war in Ukraine, and all of those things are creating a lot of volatility, but it looks like oil might be bouncing. I don't have a solid prognosis on oil. I'm going to watch the charts. Looks like we've bounced here on some volume, a little bounce. We'll see what happens with oil today. Let's look at the futures /CL. And there you go. There's oil itself. The actual barrel price of oil is right at 98.56 as I speak. Seems to be a nice bounce off the 200. So let's see if this follows through. Maybe we'll do something on oil stocks if it in fact does bounce from here.
Interestingly, Mike, it's been USO's been consolidating at a very interesting level from where it is now. It's actually sitting right on the 61.8 fib line. So, and it's been there for about a week. So what that means is if we see oil close between or under 72.29 for 2 days in a row, and if that if that 200 doesn't hold under it, technically it would be set up to go further bearish.
I like it. Let me go ahead and put that chart. Here's what you're talking about here, Matt.
Mm-hmm.
By the way, everybody, if you go into Tom's tools under stock charts, if you scroll down here, you'll see there's the ability to throw on the fib levels. That's what I just did. I just clicked stock chart fib and then hit update. And then there's the fib level that you're talking about, right?
That's the one.
Yeah. Okay. So the next fib resistance level is around 80. So I do like that support level. I think that has a good chance of holding. Let's see. Well, we're going to keep an eye on it. I'm not ready to go bullish on oil just yet. I do like being able to sell a put credit spread, Matt, below the 200-day average, though, and we're pretty close to that now. So what are you looking for before you consider going bullish on this one, brother?
Oh, I'd be looking for a solid close above that 72 on volume. And for me, I'd probably want to see it close above that 38.2 to get out of that bottom range of fib. And we're going to have a little bit of resistance at the 50 above us, but I'd like to see some good momentum and some good volume to get us out of the bottom of that range.
Excellent. Excellent. Yeah, me too. I like that. Let's take a look at bonds. So a lot of you have done back testing, right, on these credit spreads. We're going to be primarily credit spreads in the snipers. We'll also do directional trades. Maybe we'll do some earnings trades this week too, or next week. I'm not going to do any today. I forgot my point. Yeah, so one thing you don't have in a back test is what Matt and I are doing right now. We're looking at the dynamics of the market, the interplay of futures, of currencies, oil, bonds. Those things can help us get a tighter prediction about where the markets might be heading next. All right, so let's take a look at the TLT. These are bonds. And bonds, even in a rising interest rate environment, bonds are holding firm. They're going sideways for the most part. Now, what normally happens when interest rates are lifted, a week from Wednesday they will be, is that the interest rates put a downward pressure on bonds. Now that's one force. The other force is what we call risk off, where money starts flowing out of riskier assets like stocks and into less risky assets like bonds. And when the bonds start paying more dividends, more yield, that becomes more attractive. And so I keep an eye on this to see if I can see any risk off activity. And certainly TLT is not dropping. Let's look at the futures for it right now. /ZB, there it is. So there's the futures for Treasury bonds, and same chart. Today they're down just a little bit. Okay, so there's bonds. Let's look at the US dollar. UUP is the US dollar. And the US dollar has been strong recently. And today, I don't think I have the US dollar. I don't have the currencies on my Thinkorswim account. But the US dollar is getting stronger. And what that does is bring commodity instruments like gold and silver down. And that's why gold and silver have been dropping. This is a gold chart. And what I'm looking for is for gold to start rising while the US dollar either stays the same strength or it gets stronger. If the inverse correlation is broken, let me show you how to do that too. This is kind of cool in Tom's tools. I'm going to turn off my moving averages, and then I'm going to click on not paired. And then I'm going to put in the UUP and change the stock type to close only, and then hit update. And this will show you an inverse relationship. You've seen me talk about this before. And so what I want to see is this inverse relationship broken. In particular, I want to see gold rise with the US dollar either getting staying the same strength or getting stronger. So once this inverse correlation is broken and gold is rising, then that's another sign of risk off. And there is currently no evidence of that. So keep an eye on that. Matt and I will be. Now, lastly, let's look at Bitcoin /BTC. There it is. Bitcoin's down. It did crack up above 2,000 last week. We're at resistance. This is futures. So we're at resistance. Let's see what Bitcoin does. I don't think Bitcoin is out of the woods yet. So surprisingly to me, and I guess telling, is that even as the market was dropping, this new asset class also dropped. I was anticipating that given the fervor for Bitcoin, or at least prior fervor for Bitcoin, that we would see a risk, let's call it risk off move into Bitcoin. That hasn't happened. So maybe Bitcoin is sideways to down from here. I don't know, but I'm not seeing any enthusiasm for Bitcoin buyers.
It's interesting, actually, Mike. I did a bit of research earlier on in the year, and about 2 months ago, the last 100 odd days of Bitcoin was actually 86% correlated to the S&P 500, which says exactly to your point, where historically it might have been used as a risk-off asset against equities. It's now become very heavily correlated with equities, and this chart is also very much representative of Ethereum as well. Both of them are mirroring each other, and the recent price action shows that too. So very interesting to see what's going to happen with crypto now, the fact that it's so closely mirroring the equity market.
Yeah, yeah, especially here's Ethereum. Ethereum is up pretty strong today, actually. I want to check the news on that, but Ethereum's up big. There must be some news on Ethereum. But yeah, that's interesting. And if you look here at the recent activity, you can see that mirroring that you point to. This is what the markets have been doing as well. So yeah, that's interesting, Matt. I didn't know that. Very cool. Okay, we got 1 minute. Want to wait for my favorite sound of the day that's about to go. 10 seconds. Mouth watering. Excitement building. Let's see. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, and we're off. I love it. I love it. I love it. Now we already know what the futures we're pointing to, so we don't need to watch the open. I like to though. Here's the future symbol here. I can always pull up the SPX here. There's a lot of ways you can look at the S&P 500. The SPX is one. You can see there's a gap related there. There's a gap shown there because this only opened 1 minute ago. So there's a gap there, whereas in the futures there isn't. So again, we got 3,900 resistance that's in play. Let's see how that plays out. I bet this thing fades. I bet this thing fades by the end of the hour. Okay. Hey, Matt, how about we go look for some trades, man? What do you say?
Sounds good.
Mm-hmm. Well, let's start with.
I thought your favorite sound was order fill. Was I wrong?
Yeah, it is. I have another broker I use, and I like their sound too. The sound of the open only pales in comparison to the sound of a fill, for sure. Okay, let's play now. Market, in my estimation, the markets aren't going to rise. I think further downside, but even stronger is I just don't think we're going to be setting all-time highs. Market's not going to go bullish in the near term, certainly with interest rates rising in this environment we're in now. So what I'm going to do is just cast a wide net. So I've gone into the credit spreads, the call credit spreads, selecting long-term out of the money call credit spread. And now I'm going to search. And let's see what's out there. Now, again, this is Friday's data. So it might be different. Will be different most likely than now, but we can still find some trades. Okay, so when I go through this list, what I like to look for is at least 80%, statistical probability of profit. That's statistical. It doesn't take into account news. It's not directional. You have to do your own directional analysis to find the trades that you think are good. Now, silver's on the top of the list. Okay, so this is selling a 19 call. That's my line in the sand. Where is that on the chart? I go to pick 3 and I find 19, which is right here. It's a nice support level at 19. Support, support, support. Now resistance. Silver is down here. For us to get into trouble, silver would have to rise above that point. Now, silver is directly impacted by the strength of the US dollar. Okay, so if the US dollar gets weaker, silver, which is a possibility, silver could easily be above 19. And for those reasons, I don't want it. It's too close. Silver was at 19, 15 trading days ago, 3 weeks ago, silver was above 19, right? Well, there's 19 there. So we were above 19 not too long ago, and I'm just not willing to take a chance on the US dollar staying strong or getting stronger to keep silver repressed. Also, over the next, we got the Fed meeting again a week from Wednesday. If they come out and say 100 basis points, that could drive risk off into silver and gold. So I'm just a little bit leery at this stage on silver. I might consider it up here around 2050, that support resistance level right there. And I don't see enough credit to make that worth it. If I lift the short strike up to 2050, we're not going to get very much return. We're already at 16%. So that one I'm going to pass on. Domino's Pizza, DPZ, is in a bullish stance. And earnings is coming up in 6 days. No way would I play with that one. Wait till after earnings. Here's one on Peloton. And this one I'm considering. I don't know if you know what's going on with Peloton, but they stopped manufacturing their bikes about 6 months ago. And if you look at a chart for Peloton, it's it's flatlining. The issue with this one, let's pull up a stock chart of this, a Peloton. I'm just going to duplicate this tab here, and we're going to pull up a real deal chart on Peloton. I'm kind of tempted on this one, but I think that the short strike is too close. Let's see. Okay, so there's my risk graph. Let's put on some moving averages as well. Change moving average to simple, 250. Those are institutional moving averages. Let's see here. Okay, so the short strike on Peloton is at 12. So where is that on the chart? Well, it's right about where the 50-day average is. That's not bad. That's not bad. Let's pull up the risk graph. We got 16%, 82% statistical probability of profit. Earnings isn't until 41 days. I mean, not a bad one. I don't know. Here's what I worry about Peloton. It's a good company. They have online workout services, and people love Peloton. And if somebody came out and said, I want to buy Peloton because it's at $8.50 a share, that could pop us up. And I don't know, the stock's a little bit too flatliney for me. I'm going to pass on that one myself. I don't know, Matt, what do you think about Peloton? Is that something you would play with?
Yeah, no, it doesn't really excite me that much.
I can hear it in your voice, man.
Funny, I was actually looking at this chart earlier on today, and I thought, well, hasn't this company really had a fall from grace?
Didn't they, man? I tell you. Let's look at a longer term.
I remember right through the midst of COVID, everyone was going crazy buying these things hand over fist.
I think this is where they decided to stop manufacturing and selling bikes, and then boom, and then it's just been in this downtrend ever since. It has bottomed out a little bit. Yeah. I don't know. It's so cheap now. It's probably attractive. I'm just a little nervous about going after it. Now, there's a few others on here. Matt, were there any on here that you liked?
Yeah, GM, I don't mind, even though earnings is approaching. It's relatively flat through earnings. So that in itself is one that I didn't mind at first view. And that was selling a 39, buying a 40. You could get a little bit further away from the action, sell a 40, buy 41.
Yeah, I see.
And get right above that 50.
Right. If we sold here at 40, that would be a good spot. The software is telling us 39, which is right between these two lines here. 39 is also resistance. So if we were able to sell at 40, we would have how many resistance levels? 34. It's 1, 2, 50-day average, 36, 38, 39, and 40. Yeah, I don't mind that one either. Let's save that one. Let's do this.
And you've got good round resistance at 40 as well.
Yeah, exactly. So if I was to take that trade and then edit it and then lift up the strikes, I like 2 strikes, 2-point strikes. On Tuesday, we're going to talk about adjusting these. And this is a really nice little adjustment that you can do. Not adjustment, but prepare yourself for an adjustment in the event that General Motors had a strong move up. What we could do is contract this spread and squeeze, like a bellows, squeeze risk out. So this is how I do it. I propose to all of you that you do it this way. Give yourself a chance to mitigate risk in the event that GM does rise from here. So at 40, our upside break even is 40.19. We have 10.5% ROI potential, but our probability of profit goes up to right around 85%. So Matt, I kind of like that one too. I'm with you.
It gets better. It's actually going for 23 cents on the mid at the moment.
Yeah, so GM must be up. Let's take a look. Live chart GM. Good. Let's check the news though. Let's make sure. Oh, Deutsche Bank downgrades General Motors to hold from buy, adjust price. So it got downgraded. Let's check some other news here. It's been downgraded over the last, well, today it got downgraded by Deutsche Bank and, yeah, that is Deutsche Bank. Okay. Yeah, so check the news on these as well. Now that gives me, now as soon as I saw the downgrade, I became more enthusiastic. Now, when Snipers was built, the Sniper system is credit spreads coupled with compelling news. A downgrade is compelling bearish news. So when you combine a bearish credit spread with bad news, your probability increases. So that's what sniping is. That's how this got its name. You know, Matt and I, when I was coaching Matt for what, 18 months or 2 years?
Yes. And you're not sick of me yet.
No, I love you, man. Like a brother from another mother. But we started this thing called Snipers. It was just a group of people that I'd been coaching, and we became friends, and we started the Snipers group. And what we used to do was snipe credit spreads in the last half hour of the day on the SPX, amongst other things. And it really worked well. And so that's where the Snipers comes from. And General Motors, for that reason, it's up today. So we're going to get more credit, as Matt pointed out. I like 40. Let's go for 40. So on Friday, this was the price at 19 cents. And so now I'm going to go ahead and go after this bad boy. Okay, so I'm going to go to trade. September 16 is our expiration date. I want to sell the 40 call and buy the 42 call. So let's find my expiration date is September 16. There it is. And then I want to sell the 40. Look how far up the 40 is here. So I'm going to click the bid column here, the price under the bid. And then I'm going to control click the 42, control click, and that builds our 23-cent credit spread down below. Just to show you what that looks like here, I'm going to go right into the tools here and just put 23 cents. You don't have to mess around with individual prices. Just throw the credit spread, the price of the spread in there, 23-cent credit. And then you get the current view here, which is offering almost 13% on your money with a probability of 84.6%. I'll take that. I'll take that. I'll take that. Little extra. Now it's at 22 cents. The natural's 20. The mid price 22. Let's try for 23. Do a little fishing. You never know. Hit confirm and send. Contracts. Let's talk position sizing. This is the number one rule in trading is to not put all your eggs in one basket. So be sure when you're doing your trading to keep your position size at 2 to 3% of your total portfolio value. So I'm going to use 1,000 on this just for my own just for tracking purposes. We'll do $1,000 credit spreads. So for 177 into 1,000 is what? 5, 6, 5. If I did 5 of these trades in the risk graph.
Entry is at 0, Mike.
Yeah, that's the total credit right here.
Oh, yeah. Okay.
Yeah. So I'm just reflecting. It doesn't matter what the individual leg prices are. You can just kind of force the 23-cent credit, which is what I saw on this on the board with Thinkorswim. Yeah, that's what we're doing there. So this is looking good. Let's go ahead and do 5. Let me check my risk. I didn't check here. Yeah, so now if I did another contract, I'd be over $1,000. Only slightly, but I'm going to stay very diligent about money management. All right. So let's do 5 contracts. And there's 20. I'm asking for 23. The mid price is now 23. Let's hit confirm and send. Verify that this is all correct. Sell 5 vertical, GM September 16, 40, 42 call, spread for 23 cent to open. Hit send, go back over to monitor. And then we can see the price here. So it's 23 cents. Current mark price is 22. Now, I'm not that worried about 1 cent. However, you could just keep this on. One of the things about these long-term credits is that you don't have to get in this moment. Things move. We're only at 50 cents away from the mid price. You could certainly just let it sit there for the day and maybe go after it again tomorrow or later in the week. There's no rush. But I'm going to get this filled so we can track this thing. So what I'm going to do now is lower my credit price to 22. Yeah, 1 cent doesn't make a lot of difference, but it's just kind of fun. I like to price shop. So I'm going to drop it to 22, confirm and send. And it still hasn't filled. I'm going to let that sit here for the next few minutes and it'll fill. I'm quite sure it'll fill. If you really want to get in, drop it to 21, even 20. I'd take 20 on this thing. Let's see, 20 cents. Hit risk graph. Still 11%. That's really good. Over 63 days, 84.5%. All right, now I want to get it filled. I will. Here's what I'll do. I'll let this run for the day, and if it doesn't fill, I'll go back after it again tomorrow. But if it fills, then I will track it for all y'all. Okay, Matt, I think that was a trade you wanted to talk about, right? Did you have any?
But that's good.
Yeah. Good.
I think we should talk a little bit of Greek though, with earnings coming up. Did you want to talk about Vega and its effect on that trade leading into earnings?
Yeah, why don't you talk about it?
So predominantly what's going to happen is as volatility comes in to this position. So remember, we're coming into earnings, IV rises. What's going to happen is as IV rises, it's going to push those lines back into loss as IV rises, leading into earnings. But then as soon as earnings passes, there's your fill. As soon as earnings passes and the IV drops, it will suck those lines back over to the right-hand side of the risk graph again. So just something to be aware of whilst we're going to be theta positive because we've sold something, where Vega currently sits at the moment, as IV rises into earnings, you can expect to see that impact the position. But as soon as earnings has passed and it comes out of the position, those lines will suck back over into profit.
Exactly. So it's a temporary condition over the next 11 days. Well, it's actually 7/26 is the announcement, which is in 8 days now. So temporarily, Vega is going to hamstring you into earnings, but theta is going to be making you $1.44 a day. And that's a storm we can weather unless GM comes out and surprises. I doubt they will with downgrades just happening today. And it's not likely to see that. We're not likely to see that. You know, as you pointed out, Matt, the last earnings, it just doesn't move much around earnings.
Yeah, it's pretty flat.
Yeah. So even though earnings is in 11 days, it doesn't tend to hurt us too much. The gap doesn't happen. Okay. Let's do another one. RIOT has my eye here. RIOT manufactures or mines Bitcoin. And if you look at a RIOT chart, it's moving with Bitcoin. We've got strong resistance at 6 right there, which corresponds with the 50-day average. We've got resistance as well as at 8. Yeah, that's a good place to sell. And that in fact here is actually the short call. Yeah, I think that's a little close, Matt. I don't know. I don't want to get that close on this one. It was at 9.
Check out
8.
the one under it, Delta Airlines. I was just having a look at that before.
Delta 36 call. Let's look at it.
It's run sideways for about, see, earnings is just out of the way. It's run sideways for a period of time. It's got a death cross on it. The only problem is it's a really strong support there at 30.
Yeah, that's exactly right. We've got support resistance right here at 30. We also have really strong support at 28. Now, the short strike is up at 36, which is right up here, and that's above the 50-day average. That's not bad. Earnings is behind us. I like to check news and see what news we have on Delta. Let's see if there's any news that pops out here. Let's see. Oh, order book surges at Farnborough Air Show. So they're selling some planes. Delta Airlines signs deal to order with Boeing. Delta's buying planes from Boeing. That's what's going on here. And in response, let's look at live chart in Delta here. On live chart, Delta's up a little bit because they're spending lots of money on planes, and they wouldn't be doing that unless they were anticipating, that's going to increase their business, their revenue. So Delta's up a little bit. I'm going to pass on that and see what it does from here. Let's see if this 32 level holds, and if Delta starts to retrace back to the 29 level, I might consider that one. Okay. Let's go. Here's another idea, everybody. I like the market indices. One of the things about the market indices is that they are not, let me let a few people in here. We know the market news. We know what's happening in the overall market. And for that reason, we have a better control over what might be happening for the underlying stocks and instruments that track the market indices. So a good place to start when you want to go after the markets, my directional prognosis on all the markets right now is not up. So we can go to the RUT. This is the Russell 2000 cash settled index. And again, we got resistance right at the 50-day average. I would love to sell up here at 1900 or even 2000 on the RUT. The other indices are the SPX, that's the S&P 500. We've got the NDX, which is the NASDAQ 100. So I like these instruments. They're very liquid, and you can get filled at mid-price quite easily. So this is another thing you can do. I'm going to go long-term out of the money call credit spreads on index options. We got to fill on another trade. I'll come back to that in a minute. So this is what comes up on the RUT. It's giving us a 1920 call. Okay, so I look at PIC. 1920 is right above there. My question is, could we sell a little higher? Could we sell at 1950? Ideally, I would love to sell at 2000, which is a round number, Matt. I mean, that's even thousands are super strong support resistance typically. So I'm thinking maybe, let's see what we can get. Only 75% probability of profit. Statistically, the only way we get hurt is if the RUT rises. And why would it do that with interest rates rising in just over a week? So I'm going to go ahead and grab the trade. And there it is. Nice break even though at 1920. That's a good place for a break even. But let me see if I can lift it up. I don't think we're going to get enough for 2000. So let me raise it up, hit edit. Let's lift it up to 1950. And then I'm going to do two strikes. So 10-point strikes. So 1970. Let's hit risk graph. Wow. I wasn't expecting this. Now we're going to get more because this is old data. And let's see what the RUT is actually doing. The RUT is up, right to resistance, 1950. Let's try 2000 as well. All right. Probability of profit on this trade is 79% statistically. Let's do another version, right click, duplicate, and let's lift it up to 2000 just to see what's there. Edit the trade. Go to 2000 and then 2020. Risk graph. Now it's only given 8.7%. 8% is my minimum for the most part on these credit spreads. However, the probability of profit is up to 83.7%. So that's an option for those of you that are more probability oriented. Remember, markets are in a bearish posture, interest rates rising, all that we know, lions and tigers and bears, oh my, should keep the RUT at least depressed. Don't see it rising in this rising interest rate environment. So I'm going to go for this one here. By the way, I need to do this. I forgot to do this. Let me show you what we're going to be doing. Matt and I are going to be doing this. When we put trades up on the board, let me find the trade I just did. Excuse me. Here's the one we did on General Motors. Here's why you want the WhatsApp group loaded on your phone, because we're going to start doing this. Actually, hold on. Let me get filled out here. Let me check the fill price here. We'll come back to the RUT here in a minute. The fill price was 22 cents on that GM credit spread. So I'm going to make this 22 cents. You could also put in the actual prices here, 48.26. So let me do that, 48. And then 26. And I'm going to save this in a folder. I've got a folder for snipers. I save it. And now I'm going to copy this into the WhatsApp group. We're going to screenshot. And oops, try that again. We're going to screenshot these trades and put them in your WhatsApp feed for snipers. So here's the WhatsApp, here's snipers, and then I paste the trade there for all of you to see. That's what this is for. That's why we have it. And then I'll also paste the risk graph. So that's your live feed. You know, Matt and I will be watching, and if we see anything happening with the trade, potential adjustments, we'll let you know on the live feed. And so if you go to your WhatsApp group, you should see those two trades. Okay. Now let's go after the RUT. The RUT. We want the 1951. That's not it. I've got three versions of the same trade. This is the one we want, 1950, 1970. If you want to lift it up a little bit more for your own taste, go for it. But let's see what we can get. The RUT is up, so that we're going to get more than 28 cents here. 1950, 1970 for September 30. So trade September 30, right there. And I want to sell. I need more strikes in my option chain here. So I want to find the 1950, which is right there. Click sell, and then buy two strikes above 1970. Control, click on the ask, and this one's showing 380 credit. Wow. So what I'm thinking now, so if we get 380 credit on this one today, this little bounce is going to help us. I'm just going to put the credit price in. So that's going to give us 23%. So with that, what I can do now then is lift it up a bit more. I don't want 23%. I want probability. I want 23%, but I'd rather have 15% with higher probability of profit. So now what I want to do is check if I was to sell the 2000 here, which is a much better level to sell. And then I buy the 2020. Oh, wait a minute. There's, yeah, let's do 2020. showing 225 credit. Okay, that might be enough. Let's check it. Duplicate, edit. I deleted that other trade, so I'm gonna have to redo it. 2000, 2020. And the price I'm gonna be able to get here is 230. So I'll change the price to 230 here. Open at that, forcing a 230 fill. What does this look like ROI wise? There we go. Heck yes. 13% probability of profit, almost 84%. That's the one I want. That's what I'm going to go get. Man, we got a little lucky on that bounce this morning, man.
Yeah, it helped out a lot.
Yeah, for real. Now I can only do one contract. That does go above my $1,000 limit. But I'm going to place it anyway. Let's do one contract. It's at 220 now. Let's see what the rut must be fading a little bit. Let's see. No. Yeah, we're going to catch it right at the ideal spot. That resistance level probably will hold. We'll get a good price. We're positioning our credit spread right up here at 220. Okay, so let's place it. See what we can get here. I'm going to do one contract showing 221. Mid price is 215. It's dropping a little bit. Let me see what this looks like at 215. Just changing the fill price to 215. Still giving us 12%. I'll take 215. Showing let's drop it to 220 and we'll do a little fishing here. Confirm and send. Send. One thing about the RUT and the SPX and the NDX is that the mid price generally is easy to get filled at. Okay, so 220 is not filling just yet. Let's try for 215. This is one I'll let sit. Let's drop it to 215. Confirm and send. Send. Monitor. I'm going to let that sit for today. I'm not going to go after it.
So Mike, you can also on the other side, the IWM, if you went the ETF, doing it 200, 202. It's currently going for 19 cents, works out to be 10.5%. Just if you wanted to, as another option.
You want to show it? You want to show it to him? You can just show
I can show it. Sharing's disabled.
Let me rectify that. Share screen. Okay, it says you can share.
Fantastic. Okay, so this is essentially a mirror of the trade that Mike was just talking about. Instead of being the RUT, the IWM being the ETF, would look at selling a 200, buying a 202 with the same expiration. And because the IWM has the smallest strikes, it's also keeping our risk profile down as well. So one contract of this is $181. We're still making 10.5% on our risk. It's currently going for, it's back down to 18 cents on the mid. But essentially, it's the same trade. We've still got lots of resistance to the upside here, 180, 190, and then 200, which directly correlates with our short call. So still another fantastic trade and an alternative to the one that Mike was talking about as well.
I like it. I like it. Would you mind posting that in the WhatsApp group? But
I certainly can. I've just got to get it set up on my computer. So watch this space.
All right. Thank you. Awesome. Very good, very good, very good. So let me just show you one more thing. So I went after the indices, which I like to trade myself, but you could also, if you want to go after ETFs, when you run this search, ETFs, REITs, trust, optionable, and then run it, you should see the IWM trade in there as well. So these are all the ETFs out there. None of these have earnings, of course. Well, RIOT is considered an ETF. It does have earnings. I don't know why it's considered an ETF, but and going down through this list, there's the IWM. And Matt, you lifted up the short strikes to, what was it, 200 and 202? So
200, 202. Mm-hmm.
Yeah. So we'll post that in there as well. Let's see what else. I think that's what I had for today. We've got 3 trades. Oh, let me post the this trade here. This is the one that was filled, so that's already filled. And then I'll post this one here as well. This is the 215 we're going after on the RUT. Okay. Let me post that in WhatsApp for you. If you got questions, now's the time to ask them. You can raise your hand or put in the chat box, and we'll answer any questions that you have. We're going to wrap here in just a few minutes, so find the right trade. I got so many trades going here. There it is. This is the risk graph. Okay. Back to the WhatsApp group. Trades are coming. We just got filled on the RUT trade. I heard the bell. We got it for 220. If I go to filled orders, there's our 220 credit, 1038.10. So I can go back to my risk graph. That's the GM trade. Let's go back to the risk graph. Fill prices once again were 1038.10. So I'll put those in exactly as they are. 1038.10. Risk graph and save. All right, let's check questions real quick here. Okay. Ozzy, Steve Nova. Just checking. Hank, thanks. Oh, I didn't mention everybody. Hank's going to be joining the team as well. Hank's just put out some sector lineup information. Hank, why don't you post that? Would you mind posting that in the WhatsApp group as well? It's good information. Sector lineup as I see it, long XLK, XBI, various ETFs, and short XLB, XLF, XLI. Your thoughts because of market sentiment? Okay, good. So that's what we want on the live feed. We want to keep this conversation going. This isn't just about listening to Matt and Mike. It's about contributing yourself, getting in community, building energy around successful trading. And that's really the core of my business here, is to provide community and support. So please get active. Also, I'd encourage you to go into the discussion boards. If you haven't introduced yourself, please do so. This is another place to build community. So that is our first call. Wednesday night at 5 p.m. Eastern, Matt and I will be back here, and we'll be doing adjustments and advanced stuff, answering questions, having you ask your own questions, bring trades. You can share your screen. We can work together. We can adjust together if you want to do adjustments. I want to also highlight on Wednesday what I call batten down the hatches, which is where you take a losing credit spread, you contract, and then you butterfly, and you drop your risk by about 75% typically if you do it right, and then manage those going forward. So we'll talk about, in the unusual circumstance when you lose on these things, what we can do to greatly mitigate our risk. All right, with that, I'm going to open the floor for any last questions. We had some email problems, as I said earlier, and we're just learning this Kajabi thing. It's a platform that we use to manage the whole community, and apparently there's some, let's call them issues, bugs with software. We're going to get all that sorted out as we go along over the next coming weeks. It's good to see everybody. All right, Matt, anything for you to wrap up? Anything you got?
No, thank you, everybody. I think it's been a great session. Thank you very much for your kind feedback in the chat. It's great. Very much looking forward to these sessions going forward. I think they're going to be awesome. And if anyone did put on that IWM trade, I'm hoping you got filled like I did at 19 cents. So we'll forward that into the group soon.
Yeah. Awesome. 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 All right, everybody. We have, most of you have hedge fund. Hedge fund live is tomorrow during the last hour of the day, 3 p.m. We're going to be getting into broken wing butterflies, maybe some matadors. Clayton, you'll be happy to hear that. We'll,
Risk Corpsal.
we're going to be hedge fund stuff. Good morning, buddy. All right, and Gerardo, thank you for what you do, man. You guys will be hearing from Gerardo. He's actually rendering the Fathom recording. When you want to see the recording, you'll get an email. But what you want to do is go to your dashboard, and there's going to be 2 sets of recordings. You go to your dashboard for snipers, and then you'll have the recordings here, the live trade recordings. They'll be there in the next hour or so, and then on Wednesday after the group coaching, there'll be another. So you can come right to here and get the recordings. Also the links are right here in one handy little spot. So I hope that's working for everybody. I wanted to make it easier for people to find their links. Links is not as much of a problem as recordings. I can't tell you the number of emails I get. Hey, Mike, can you resend that recording from June the 15th, 2022? So I think we've solved all that. You can go right here to your recordings anytime you want and get access in various formats. There'll be a YouTube format, which is just plain, just the video. There's the Fathom link that you'll have, and then there's also the podcast. So all of that will be available for you. And with that, I want to thank everybody for joining. Thank you for your business and your hearts and your drive and action taking. I love being around people like all of y'all, and thanks for being here. All right, everybody. Thank you, Matt. Appreciate you, brother. Y'all have a good night down there.
Thank you, brother.
Yeah, man.
I certainly will. It's almost my bedtime. It's only 12:15. The morning's still young.
All right. All right. Thanks, everybody. We'll see you soon. Pura vida.
See you all.
Rica.